Welcome back to the Crypto Intellect, your home for the biggest stories, hidden signals, and market-moving developments in crypto. Today we're diving into something that has quietly happened with XRP that almost nobody seems to be talking about, and honestly, it might be one of the most interesting developments we've seen in weeks. While most of the crypto community has been focused on Bitcoin's sideways action, Ethereum's struggle to gain momentum, and the constant flood of headlines surrounding artificial intelligence and traditional markets, XRP has been putting together a story that deserves a lot more attention. What makes this even more fascinating is that the signal we're discussing today is not one that appears every day. In fact, it's relatively rare, and historically these kinds of developments tend to get noticed only after the market has already started reacting. That's why today we're breaking down exactly what happened, why it matters, what investors may be overlooking, and whether this could potentially be setting the stage for a larger move in the weeks ahead. As always, remember that this is not financial advice. This is simply a discussion of market developments, trends, and observations. Make sure you do your own research before making any investment decisions. Right now, XRP continues to trade in a range that has frustrated both bulls and bears. Many investors expected stronger price action after some of the regulatory progress we've seen throughout the year, yet the token has spent much of its time consolidating rather than exploding higher. That has created a situation where many market participants have simply stopped paying attention. When an asset isn't delivering massive daily gains, people naturally begin looking elsewhere. We've seen this countless times throughout crypto history. Attention shifts to whichever project is producing the biggest headlines, and assets that are quietly building strength often get ignored. But sometimes those quiet periods become the most important periods. Sometimes the biggest opportunities emerge when nobody is paying attention. XRP has recently managed to string together several positive trading sessions following a stretch of weakness. And while that may not sound particularly exciting on the surface, market structure often changes before sentiment changes. The chart can begin improving long before social media notices. That disconnect between reality and perception is often where interesting opportunities emerge, and it may be exactly what we are witnessing right now. At the same time, the broader crypto market continues to remind everyone that opportunities exist, even when overall conditions feel sluggish. Over the last several days, we've seen various digital assets suddenly post double-digit gains seemingly out of nowhere. One day it's a Layer 1 blockchain, the next day it's an exchange token. Then attention shifts to an entirely different sector. This rotation of capital is normal and often occurs during periods when traders are searching aggressively for momentum. Recently, one of the top cryptocurrencies managed to surge by more than 10% after speculation surrounding an upcoming announcement captured market attention. That rally served as a reminder that catalysts still matter, and that markets can move quickly when investors become excited about future developments. The important takeaway here is that while overall crypto sentiment may feel subdued compared to previous bull market peaks, money continues flowing through the ecosystem. It doesn't disappear. It rotates. Investors constantly seek the next narrative, the next breakout, and the next opportunity. The question now becomes whether XRP could be positioning itself to become one of those stories that suddenly captures widespread attention after spending weeks quietly building beneath the surface. What makes the current XRP situation particularly interesting is the growing divergence between investor behavior and price performance. Normally, when demand increases significantly, prices eventually reflect that demand. Yet XRP appears to be experiencing something unusual. Despite steady interest from investors, price appreciation has remained relatively restrained. This disconnect has sparked debate across the crypto community. Some traders view it as evidence that the market simply isn't ready yet. Others believe larger market forces are offsetting buying pressure. Regardless of which interpretation turns out to be correct, the divergence itself is noteworthy. Markets do not remain disconnected forever. Eventually, either demand weakens and validates the lack of price movement, or price catches up with demand. Historically, these periods of tension often precede major moves because the imbalance cannot persist indefinitely. Investors watching XRP closely have begun paying attention to this relationship, because the longer it continues, the more significant the eventual resolution could become. Whether that resolution is bullish or bearish remains uncertain, but the setup itself is becoming increasingly difficult to ignore. Now let's talk about the rare signal that has generated growing interest among analysts. XRP investment products have been attracting capital at a pace that has actually surpassed both Bitcoin and Ethereum in recent weeks. Think about that for a moment. We are talking about a digital asset that many people claim is underperforming, yet investor flows continue entering XRP-focused products at a remarkably consistent rate. This is not something that happens every day. Bitcoin usually dominates attention. Ethereum often follows closely behind. XRP outperforming both in terms of investment product inflows is a significant development. Even more remarkable is that this trend has persisted for multiple consecutive weeks. When unusual behavior continues beyond a single reporting period, analysts begin treating it less like noise and more like a legitimate signal. Investors are effectively voting with their capital, and right now that vote appears surprisingly favorable toward XRP. The fact that this has occurred during a period of relatively muted price action makes the situation even more intriguing because it suggests conviction may be building beneath the surface. One of the biggest reasons this signal stands out is because it reflects sustained interest rather than a one-time burst of enthusiasm. Anyone can get excited for a few days. Markets often experience temporary spikes in demand following headlines or social media trends. Sustained demand is different. Sustained demand suggests investors are building positions with a longer-term outlook. Looking at recent data, XRP-related investment products have managed to maintain positive flows during periods when many market participants expected demand to fade. In fact, there has been only one notably negative month within a broader stretch of positive accumulation. That consistency matters. It indicates that investors continue allocating capital despite the frustration associated with sideways price action. This behavior is often associated with conviction rather than speculation. People chasing hype tend to disappear quickly when price momentum fades. Investors who continue accumulating during periods of uncertainty are often operating with a longer time horizon. Whether they ultimately prove correct remains to be seen, but their persistence is undeniably noteworthy. Of course, one of the most common questions being asked right now is simple. If demand is so strong, why isn't the price moving more aggressively? That is a fair question, and one that deserves careful consideration. Markets are influenced by countless variables simultaneously. Buying pressure is important, but it is not the only force affecting prices. Selling pressure matters too. Liquidity conditions matter. Derivatives activity matters. Algorithmic trading matters. Broader macroeconomic conditions matter. What we may be witnessing is a scenario where steady accumulation is occurring while other market participants continue distributing or taking profits. In such an environment, demand can remain healthy without producing immediate explosive gains. This can create frustration among investors expecting instant gratification. However, markets rarely reward impatience. Many of the biggest moves in financial history occurred only after extended periods of consolidation. The challenge is that most people lose interest before the breakout finally arrives. That psychological reality often separates long-term participants from short-term speculators. Another factor worth discussing is the role of retail investors. Many observers believe a substantial portion of XRP's current demand is being driven by everyday investors rather than large institutions. If true, this creates a fascinating dynamic. Retail investors can generate significant momentum, but they often lack the overwhelming financial firepower possessed by major institutional players and large trading firms. As a result, retail accumulation may take longer to impact market prices. Imagine thousands of investors steadily adding to positions over time, while larger trading systems simultaneously create volatility and short-term selling pressure. The result could be exactly what we are seeing today: strong demand that is not yet fully reflected in market value. That doesn't necessarily imply manipulation or suppression. Sometimes it simply reflects the complex interaction of competing forces within a highly liquid global market. Nevertheless, the persistence of retail interest, despite relatively limited price appreciation, speaks volumes about the confidence many investors continue to have in XRP's long-term prospects. At the same time, regulatory developments remain one of the most important variables shaping the future of the digital asset industry. Across the United States, lawmakers continue debating how cryptocurrencies should be regulated and integrated into the financial system. This conversation extends far beyond XRP itself. It touches every major blockchain project, every exchange, every stablecoin issuer, and every company building within the crypto ecosystem. Supporters of clearer regulations argue that businesses need certainty before committing significant resources and investment. Without clear rules, innovation often migrates elsewhere. With clear rules, companies can plan for the future, hire employees, attract investors, and build products with greater confidence. That debate has become increasingly prominent as policymakers acknowledge the growing importance of digital assets in the global financial landscape. For XRP holders, regulatory clarity could potentially represent a major catalyst, because uncertainty has historically been one of the biggest obstacles preventing broader adoption and institutional participation. Several prominent policymakers have emphasized the importance of establishing a framework that allows innovation to flourish while still protecting investors. Their argument is straightforward. If one country fails to create a supportive environment for digital asset companies, those companies may choose to build elsewhere. Capital, talent, and innovation tend to flow toward jurisdictions offering the most attractive conditions. This perspective has gained traction because cryptocurrencies are fundamentally global technologies. Developers can operate from almost anywhere. Companies can serve international audiences. Investors can access digital assets across borders. As a result, competition between countries has become increasingly important. For XRP and the broader crypto market, the eventual outcome of these regulatory discussions could influence adoption trends for years to come. Investors understand this, which is why legislative developments frequently generate strong market reactions. While regulations alone will not determine XRP's future, they could significantly influence the environment in which that future unfolds. Another increasingly popular viewpoint is that the future of finance will not be a battle between traditional banking and cryptocurrency. Instead, many industry leaders envision a world where both systems coexist and complement one another. This perspective has evolved considerably over the past several years. Early crypto narratives often framed digital assets as direct competitors to traditional financial institutions. Today, the conversation is more nuanced. Banks are exploring blockchain technology, financial firms are experimenting with tokenization, payment companies are integrating digital asset infrastructure. Rather than replacing traditional finance overnight, crypto appears increasingly likely to become integrated into existing systems. This shift matters because XRP has long positioned itself around payments, settlement, and financial infrastructure. If collaboration becomes the dominant theme rather than competition, assets designed to facilitate efficient value transfer could potentially benefit from that evolution. It remains an ongoing process, but the direction of travel is becoming increasingly apparent. Looking beyond daily price action is perhaps one of the most important habits investors can develop. Markets are emotional in the short term, but often logical over longer periods. Today's sentiment can change dramatically within weeks. Assets that appear forgotten can suddenly become market leaders. Assets receiving endless praise can unexpectedly lose momentum. That is why focusing exclusively on short-term fluctuations can sometimes be misleading. The bigger picture often matters more. Right now, many investors appear discouraged by the lack of immediate fireworks in XRP. Social media engagement has cooled, search interest has declined, some influencers have shifted attention toward other opportunities. Yet history repeatedly shows that major market moves frequently emerge during periods when enthusiasm is lowest. By the time excitement returns, a significant portion of the move may already have occurred. This is one reason experienced investors often spend more time monitoring underlying trends than daily headlines. The current environment also highlights the cyclical nature of investor psychology. When markets rally aggressively, everyone wants exposure. When markets consolidate, enthusiasm fades. During periods of uncertainty, many participants begin questioning their convictions and searching for alternative opportunities. This behavior is entirely normal and has occurred throughout every major crypto cycle. What makes the present moment interesting is that despite weaker sentiment, several underlying indicators continue showing resilience. Demand remains present, regulatory discussions continue advancing, infrastructure development continues expanding, institutional engagement remains active. These factors do not guarantee future price appreciation, but they suggest the industry itself continues progressing even when market excitement temporarily cools. For XRP specifically, that distinction may prove important because fundamental developments often require time before they are fully reflected in valuation. One of the most overlooked realities in investing is that consolidation itself serves a purpose. Markets cannot move vertically forever. Periods of rest allow excess speculation to unwind and establish new foundations for future growth. During these phases, impatient participants often exit while longer-term investors quietly accumulate. That process can create frustration because it lacks excitement. Headlines become less dramatic. Price movements become smaller. Public attention shifts elsewhere, yet many of the strongest trends begin after lengthy consolidation periods. This does not mean every consolidation leads to a breakout. It simply means consolidation is often a necessary component of sustainable market behavior. XRP's recent trading activity fits this description remarkably well. While many investors remain focused on what the asset has not done, others are paying attention to what it has managed to maintain despite challenging market conditions. As we move deeper into the year, attention will likely focus on whether crypto markets can regain stronger momentum heading into the summer months. Historically, certain periods have produced powerful rallies, while others have delivered prolonged consolidation. Nobody knows with certainty which path lies ahead. What we do know is that conditions can change quickly. A major regulatory development, a significant institutional announcement, stronger macroeconomic conditions, or renewed investor enthusiasm could alter market dynamics in a matter of days. XRP's ability to maintain investor interest throughout a relatively quiet period may position it favorably if broader market sentiment improves. Whether that translates into immediate gains remains unknown, but the foundation being built today could influence future performance in meaningful ways. Ultimately, the rare signal attracting attention right now is not necessarily about price. It is about behavior. It is about investors continuing to allocate capital despite limited short-term rewards. It is about demand remaining resilient while sentiment remains subdued. It is about XRP quietly outperforming larger cryptocurrencies in investment product inflows, while much of the market focuses elsewhere. Those developments do not guarantee anything, but they are difficult to dismiss. Sometimes the most important signals are the ones hiding in plain sight. Sometimes the market tells a story long before the headlines catch up. Whether XRP is preparing for a major breakout or simply building a stronger foundation for the future remains to be seen. But one thing is clear, this is a development worth watching closely, and it may explain why some of the smartest observers in crypto are paying attention even while much of the crowd remains distracted. If you enjoyed this update, be sure to stay tuned for more insights right here on the Crypto Intellect. And as always, keep learning, keep researching, and keep your eyes on the signals that others might be missing.